Hi guys, welcome back for another episode of Bitcoin Benny. And today we are very, very honoured to have Dan from the Chart Guys join us to talk about TA, because I know that's a very popular request with a lot of the viewers and a lot of the people that follow on Telegram. So thank you very much for joining us today.
Absolutely. Glad to be here.
Well, let's get stuck straight into it. For those people who are new to crypto and are new to investing in general, can you just explain the importance of TA and why you use it in crypto markets?
Sure, absolutely. So first off, the most common thing people say is if technical analysis worked, everybody would use it. And to a degree, that's just not true because what it really requires is putting in tons and tons of effort and thousands of hours. So in terms of why everybody doesn't do it, that's why you have to put in a ton of hard work. But the way that it works is it's a way to visualize on a chart price action and to establish trade game plans in terms of putting your risk and reward in a way that's able for you to understand it. So just a very simple example, if a key level breaks a key level of resistance, if my reward potential is, looking up $5 before the next resistance, and then I put a stop loss where I would risk on the trade $2.50, my risk to reward would be 1 to 2. So I have twice as much potential reward as risk. So really what technical analysis is for me is eliminating emotion, being able to make unbiased decisions based on the visualization of the chart and the data, and just being able to manage our positions and to allow us to be agile and not subject. I just did a live stream where I pretty much said that the people that are buying and holding, it's like a leaf blowing in the wind, and the wind is those market conditions and the whales and
Yeah,
market sentiment and news. And if you're just being blown about like that, you have no control. And what we want to have as traders is control of our financial destiny. And technical analysis for the last 8 years has given me that ability to manage my positions really well.
yeah. Now, being a fairly new market, now I know it's a few years old and all the rest of it, but I mean relatively young in comparison to some of the other markets, and its market cap isn't as big as some of the other markets. How much of an impact does news play on TA?
It
So what I mean by that is how much does the media control what happens in TA?
Definitely very significant. And I see it in stocks too all the time. I traded stocks for 7 years, and you were just telling me about your previous history with stocks, but there are times where I will see, a price coming up to a key resistance level, and then a group like Citron or Andrew Leff will come out and short the stock at that key resistance. And there's definitely news. I always say that news is not just a random timing. There's always a time that it's intentional in some degree to when it's being put out. Unless it's breaking news and the world just found out about something, it's timed in my opinion. So we just had an example today where there was news that came out over the G20 summit that everybody's been a little worried about the potential regulations that could come from that meeting. And the news came out and said, they're not looking to make any new regulations. They're just looking to review existing regulations. And that caused the market to essentially say, okay, we're done pulling back for now. The bulls are going to show up and the shorts are going to do some covering. So news, that's a point that a lot of people make. You can't put news on a chart, and I will absolutely agree with that. When news happens, it does change the technicals, but it allows us to again shift and see. I can see right now that because this news came out, that the low of the day is going to be in for today, and there's the potential that we see a key bounce and form a weekly higher low on Bitcoin, which is something that we've been keeping an eye out for.
Wow. So okay, so that's there's 2 points that I want to raise for that. So in times of trouble or in times of good news, a lot of people will refer to people that are very well versed in TA and expect that you know exactly what's going to happen next in the market, and that if you get that wrong, then CTA doesn't work and all the rest of it. So in a situation like this, and if someone was to come to you today and say, "Hey, are we about to start the next bull run? And we've been in alts winter and a bit of a bear run for a little while now," how do you tackle a question like that?
Absolutely. So that's, yeah, another valid point is something that I always say, and it's a common misconception on technical analysis because there's analysts out there that will say, this is going to happen. We're going to go to this price. And in reality, no one ever knows where the price is going to go. All we can do is put the
Yeah.
odds in our favor. So just like if you're a card counter playing blackjack, you don't know what the next card is going to be, but you know the percentage odds of which it's more likely to be. So if you over time, if you consistently know those slight advantage odds, it adds up into your favor. So I'd say that I never, I'm not predicting things, I'm reacting to things. So when the price level does certain
Yeah.
things, I can shift the percentage odds. So if someone were to ask me, where's the price going to go because of this news, I can say, well, if this key level of resistance breaks, the odds that the daily bounce and the daily downtrend are going to break will increase significantly. So it's not going to be a sure set in stone thing, but again, it shifts the odds in our favor to know what is the more likely scenario to happen. And I'm wrong often, and it's keeping your losses small and allowing your wins to run, more significantly. That's the trade management that allows you to, profit over time. And I always say that technical analysis is 1/3 book learning, the actual, definitions of the candlesticks. It's 1/3 psychology and emotional control to be able to act on everything that you just learned. And it's 1/3 trade management. And you have to have all three of those pieces of the puzzle for it to work. Otherwise, if it were just book learning, everybody that went to university or college would be able to do it. And it's the emotional aspect of things that, in my opinion, is the hardest for people to get down.
Yeah, absolutely. And I think that when we've got a new space like crypto, a lot of people are investing with emotion, and a lot of people are actually relying on Twitter posts from people who are not qualified or whatever, or people that are actually using TA and might be good at it, but they're saying it will go to $8,507. And if it goes to 8,502, they say you don't know what you're talking about. So it's pretty bold if people are actually going out and sort of making those type of predictions. So what else do you look at? So, for example, say today we've had this great G20 news and it's better than expected, and we've now seen a little bit of a price run. What other factors do you look at besides just TA or in forming your TA opinion? So where else do you get research, or what do you look to for news and information?
So definitely market sentiment, and the market sentiment before this news came out has been really bad, and people are saying, should I take my holdings off of my hard wallet and sell my long positions, because they're getting fearful that we're just going to see continued downward action for a long period of time. So I'm gauging market sentiment, and we have a pool of hundreds of traders, and that's a really nice sample size to get a general feel of what's going on with people in terms of their emotions. But all the things that I look for are really indicators on the chart. So if I see that after this initial spike of the news hitting the market, if I see volume continuing to show bullish action and we see continued volume, that tells me that sentiment is shifting, because it tells me that people are still getting in, and it wasn't just a surge once the news came out that is going to, fade away over the next 12 hours or so. So it's definitely indicators on the chart. It's definitely getting a gauge of the sentiment of people in the social media world. And a point you made, it's definitely true that, a lot of people will learn technical analysis for a month and then start posting charts. And that's why people get frustrated, because they don't know who to follow. And I would say that basic criteria are, if the person's been using technical analysis only in the cryptocurrency space, that's probably a red flag, just because they don't have experience in multiple markets. If they've been doing it less than 2 years, that's definitely a red flag. You definitely need thousands of hours. It's the rule of 10,000 hours. If you do anything for 10,000 hours, you're going to get really good at it. And that takes multiple years to build up that kind of time. And another red flag would be if, let's see, I lost the third red flag, but those are two clear red flags that you should be on the lookout for in terms of who you look to towards technical analysis. And you can't even trust Twitter followers, because you can buy Twitter followers and inflate your own numbers. So it really comes down to the person's experience and how they have been doing historically.
Okay, so I've got a curly one for you. I know that you traditionally stick to the top stocks, and there's probably a very good reason for that, because of the fact that there is the volume and all the rest of it to support the movement. So for those people who are into these speculative coins, and they're into these coins that don't have as long a trading history and all the rest of it, what do you look for before you say I could accurately chart that and have a good look at it? Are you looking for a combination of volume, and are you looking for a combination of trading history? Are you looking for exchanges that they're listed on for liquidity and making sure that the bots aren't running them like OKEX? Or how do you include a new coin?
Yeah, you definitely nailed it with all of those. It's volume number one. I need to see the dollar volume, because if there's not a lot of dollar volume, the price action is going to be jumpy and all over the place, and I'm not going to be able to do anything with it. So, and it's all tied together. If you're on exchanges that are legitimate, you get more volume. So when a coin gets listed to a new exchange, that means there's a whole new market on that exchange of volume that is going to come in. So the fundamentals, and the fundamentals and the marketing team that can build a community around their project, all of those things contribute into which coins get added to which exchanges. And the more exchanges you're listed on, generally the more you'll be able to use technical analysis, due to volume being the underlying main factor.
Yep. Now, another thing is, I'm sure that you probably looked at it in depth as well. This is something that I get asked a lot. Going back about a week and a half or 10 days ago, if you had a look at the setup for OMG, for example, it looked beautiful. It was a really solid structure. It looked like it was about to take off. And obviously, we're still very heavily reliant on Bitcoin, and Bitcoin took a dive. And as a result, OMG went from $18 or $19 right down to about $9 now. So a lot of people would say, hang on, this is terrible. It looked like a good structure. Even very experienced TA people told me this looks like a good structure. Maybe no one knows what they're talking about, but they don't really understand the dependency on Bitcoin. And the issue is that when you see a structure like that, people like me, I'm not as you know, I'm not a traditional TA person. I look at it and think to myself, hang on, that will come back into play once Bitcoin turns around. So how do you deal with situations like that?
So you're absolutely right. It's the correlation to Bitcoin, that Bitcoin's running the entire cryptocurrency show right now. And we're keeping an eye out for that correlation to change, but there is no change right now in that correlation. So I make my trading decisions. If I'm trading Litecoin or Ethereum, I'm watching the Bitcoin chart. And that is a very significant factor in my analysis on what I'm going to do. Because just like you said, there are plenty of times where we have a bullish setup and a clear bull break. And if it occurs on Litecoin, but it hasn't occurred on Bitcoin yet in terms of the same kind of bull break, I say, okay, we need to be a little bit cautious, because if Bitcoin does not get this bull break, it's going to inhibit Litecoin, and Litecoin's bull break won't really see much follow through. So on a setup like OMG, and what I use it as a benchmark. So if Bitcoin is the benchmark, I look at charts and say, okay, these charts are stronger than Bitcoin, so they have bullish favor. And these charts, like Ethereum recently, is weaker than Bitcoin. So I use that to gauge, and it's the same thing I do with stocks in the S&P 500, which is a strong correlation to individual names. So I will play the weaker names bearish, and I will play the stronger names bullish, essentially going with the trend. But like you said, if OMG in that setting, and I know exactly the setup you're talking about, it was more bullish than Bitcoin at that point. It had already broken to a higher high where Bitcoin had not broken yet. And then, of course, any kind of FUD that hits and drops Bitcoin down, we're going to see any name that has that correlation drop with it, regardless of the key break of resistance or the key clear bull setup that we had. So it's all about Bitcoin at this point.
So you've just raised a really good point. So for me, coming from traditional stock markets originally, the first thing that I found difficult was the fact that I had to actually I'd have to be looking at a chart for Bitcoin as well as the chart that I'm looking at for the token or coin that I'm looking at purchasing. That's something that traditional stock traders are not necessarily used to. You'd look at a setup and you'd think to yourself, okay, this is really good. The market conditions are less volatile. There's less outside influences and impacting. I mean, obviously there's a lot of stuff that still impacts it, but it's a more mature market. It's bigger. So anyone who's opening just one chart is bound to get wrecked if they're not actually taking into consideration that Bitcoin movement.
Yeah, absolutely. And I think mature market is the right word and the right way to put it, in terms of why, certain stocks can completely do their own thing. The stock market can be down 1%, and we can have individual stocks, if they had good news or something, be up 5%. They can trade on their own, certainly a lot more than this really infant crypto space. Like you said, it's 8 years at this point, but compared to 100 years of the stock market or whatever it is, that's nothing.
So I've got a really interesting question for you. If you look at the Bitcoin dominance, obviously my opinion is, and I've stated this on a number of videos, is that it's not healthy for Bitcoin to dominate at around the percentages that it has been at around that, especially when it got up to 60% coming up towards the end of last year and the beginning of the run. For my mind, I think we need to have a few of these alts make up some ground on Bitcoin as far as market dominance is concerned. And I think we need to probably see one or two go past it, based on the fact that it has a limited market, a limited circulation as well. How important do you think it is for the dominance of Bitcoin to come down in a maturing market?
It definitely will. That's what will weaken the correlation to Bitcoin that we're seeing. So the more that we have coins that are either similar to Bitcoin or once we get surpassed, that's exactly what this market needs to mature in terms of not being held back by Bitcoin. If it, and really fundamentally speaking, it shouldn't be this way. Bitcoin shouldn't have an impact on some of these projects that aren't related to Bitcoin and the uses of it in any way. So that's where we're at, and it's because of the market dominance that Bitcoin does have, and it's because of everything, media, all of it. CNBC, when they started covering cryptocurrency, it was Bitcoin, Bitcoin, Bitcoin every day, and they started to, look into other things like Ethereum and Ripple, but it's very clear that Bitcoin is the market gauge at this point, and we are going to need to see those market caps get closer together in order to begin to weaken that correlation.
Yeah, and you mentioned in previous videos you were talking about, I know that the Winklevoss brothers and several key investment firms have tried to get some sort of adjunct into crypto and tried to make it that you can purchase different cryptocurrency stocks. And you were saying whichever one is the first one to be approved, make sure that you jump on that, because it'll take off like a rocket ship. Do you see that happening anytime in the near future, that anything will get passed?
Maybe not this year, but within, a couple years, definitely. And you're right. That's the kind of news that I will instantly go all in on that news and ride out at least for a few days, just because the amount of hype and momentum that attention will get. But there are little things that are happening now. So Coinbase was just on CNBC, which is a major financial news network here in the US. And they made the announcement that they're going to have this little index fund now, where you can just buy, when you buy this little index, it's going to give you any coin that's listed on GDAX, which right now is just Bitcoin, Litecoin, Ethereum, and Bitcoin Cash. So once they add coins, that'll change. But essentially, that's an ETF. And he said it's essentially like an ETF. And then he very quickly said, but it's not an ETF, because he needed to make the legal distinction. But it's going to act as the same way. So people that want to be a little bit more diversified, and people that want to, get into the crypto market, not necessarily one coin, that's the way to do it. And that when that happens on a large scale with the US stock market, the amount of dollar volume that the stock market sees compared to cryptocurrency space, cryptocurrency bulls are just salivating and saying, let some of that money come this way, because it will definitely have a big difference. And it's the hurdles for all of, the stock market, historically speaking, is older generations, and there's hurdles in terms of the technology and all these exchanges and websites that people aren't used to. It's keeping money out of this market, and once those floodgates open, it will be very significant.
Yeah, I know a lot of people are talking about that May 14, May 15 mark as being the day that the floodgates open, or the time that the floodgates open and all the money pours in. So that'll be interesting to see. But from a charting perspective, for the people that are new to crypto, and a lot of my followers are not TA experts, when you're looking at the charts and the setups in this particular couple of months that we've just been through and we've just endured, are you looking at them and thinking to yourself you are somehow less bullish on crypto than you have been, or are you looking and taking into consideration the news outside and saying this is all just part of growing up and maturing, and are you more bullish on crypto than you have been before?
It's definitely not discouraging me, just because we've been anticipating this, and all fall I was saying, this is not sustainable. This move is not sustainable, and we will enter a time period where we're going to see multiple months of consolidation. And the harder you run, the harder you pull back, because you're not establishing supports on the way up and you're getting extremely overinflated. So now we're in the pullback phase. And really, again, in the live video I just did, where I went into the monthly charts And if you look at where we came from and what the monthly charts are doing, it's still an extremely healthy chart. The amount of consolidation we've seen, considering where we've come from in the past 2 years, there's no red flags, technically speaking, long term at this point. And again, volume is something I'm looking out for. If we were seeing increasing bear volume on the monthly charts, that would also shift my perspective a little bit, but we're not seeing that. So overall, I'm not too worried about the space long term. If Bitcoin dumps down and gives back 90% of the move and we dump down to 2000, then we'll start to say, okay, this is going to have a psychological impact on the market. People are going to be hesitant to get back in if they could see that it can drop 90%. So that will have a factor, but at this point, there's still no major red flags on this consolidation long term.
Yeah, and I guess one of the other points I wanted to raise is that, I talk about that all the time on my channel, and I say, don't give up hope. This is actually part of the cycle, and I think obviously we know that a lot of that smart money is going to come in, and that is going to mean that they are trying to shake out the weak hands now, and they see their opportunity. And it's pretty easy to manipulate some of these markets. Some of these coins do 15, 20 Bitcoins worth of volume in a day, and people don't realize that just by dropping 2 or 3 Bitcoins, people are prepared to take that loss to pick up cheaper coins and then obviously end up better off in the long run. So what I want to say is how important, or what I want to ask is, how important do you think TA is going to be now that we're going to have traditional Wall Street types coming into the market that know how to chart, they know how to manipulate markets, they know how markets work? There's going to be a lot of new traders and a lot of traders that have only been on the scene for 6 months to a year that are going to get really, really badly wrecked if they don't know what they're doing.
Absolutely agree. When I first started trading the space back in May 2017, I very quickly was saying, this is the easiest technical analysis. This is the most fluid and true technical analysis I've ever seen. And that, in my opinion, is because so many traders were, experiencing their emotions and not really knowing technical analysis. So once the whales get in, there's key levels. So if you say you have a key level of support, these whales know that if they drop it below that key level of support, they'll trigger stop losses, they'll initiate sells, and then they can scoop that up and then run the price back up. Where back early on, I was astounded at how consistent it kept playing out time and time again. And it was very clear that the market was very able to be benefit. Technical analysis was a huge advantage at that point. It will be less of an advantage when we have more bots and we have more, again, people that know what they're doing. But so that is something to be aware of. And that's why I keep telling people on my channel, you want to branch out. If you have been trading the cryptocurrency space for a while and you're familiar with technical analysis now, start to check out stocks and start to get familiar with how that works, because we're really just looking for financial opportunity, and we're going to be able to bounce around to different areas at different times. And having that window of opportunity in different places is going to benefit you in the long run. The more knowledge, the better. Knowledge is certainly power in this space.
Yeah, absolutely. And the last thing I really want to talk to you about is, how do people get involved and how do people learn from you? I know that you run a pretty good course. So what should people do if they want to learn a bit more about TA and understand a little bit more about how market movements work?
So honestly, step number 1 is not buy anything. Come over to our YouTube channel, and we got plenty of introduction free content where you can check out, the introduction to technical analysis video, and I've got some support and resistance and trendline videos, and just see if it's something that you watch and say, okay, this makes sense to me. I want more information. From there, we have an entries and exits course that's more driven towards the basics of technical analysis, and it was created before I got into cryptocurrency, so it is relevant, or it is drawn on stocks. That's where my examples are and things in the courses, but 99% of that information is transferable right over to cryptocurrency, which is why a lot of our stock traders in our group had a really, really easy time making that transition. So entries and exits is a course, and then we have a cryptocurrency course where I essentially apply all of that to the cryptocurrency space. And I'm going to be adding additional content just to that course without any additional cost. Over the next couple of months, I'm going to be adding, because of course the market's changing so much, there's different strategies for different trends and things like that. So I want to talk more about shorting, because people now obviously have a lot more questions about how to short with this kind of market environment. So Those two courses, we also have an alert system for technical analysis where when certain conditions are met on the chart, we have robots that send out automatic alerts and let people know. Essentially, that's for people that can't sit in front of the computer all day or have a different job, but that's further down the line. If you're just learning technical analysis, the free videos, see if it's something that you can get behind and makes sense to you, and then checking out the courses would be the next step from there.
And that's a good question, actually. If you're a person who works full time, you don't have a lot of spare time, and you've just got your weekends to trade or whatever, these courses, will they set you up to be able to do like weekend day trading or part-time day trading? They obviously they can apply to any of the free time that you have. You don't have to be doing it for 60 hours a week, obviously.
No, not at all. And it's day trading and swing trading, so you can apply. That's the best part about technical analysis, where it's the same on the 5-minute time frame where each candlestick represents 5 minutes, or on the daily time frame where each candlestick represents 1 day. All of the same analysis can apply. So you can very easily say, all right, I only have time to trade, a few times a week, and look at just daily and weekly charts and longer term perspective to make your decisions based off of.
Yep. Well, fantastic. What we'll do is we'll make sure that we put links below so that people can check out your course and check out your YouTube channel for those who haven't had the chance to see it before. But really, really appreciate you taking the time to come on and talk to us today, because so it's something that a lot of people ask me about, and a lot of people have misconceptions about TA and assume that it is the be all and end all of crypto existence. So it's very good to actually talk to someone who does it so well, and we really, really appreciate you coming on today.
Sure thing. Thanks for having me, and let's do it again in the future.
Yeah, absolutely. Thank you very much.
Thank you.